Okay, welcome everyone to this live intraday strategy webinar. Today is Thursday, April 14th. Michael Boudreaux here with you. We are 30 seconds, 20 seconds now away from the U.S. CPI read for the month of March. Most important figures, guys, are going to be the year-on-year core ex-food and energy, looking for a hold at 2.3%, and the month-on-month core also expected to downtick from 0.3 to 0.2. About 5 seconds out. Dollar came into resistance earlier last night, so keep that in mind. Coming in weaker than expected month on month, weaker than expected on core, and a drop in the core headline figure 2.2%. That's going to push off expectations for interest rate hikes even more so, guys. So soft inflation reads here for the U.S. Looking at real average weekly earnings, which is a gauge of wage growth, obviously one of the main factors the Fed is looking at. A decent print there, 1.1%, but we did get also an upward revision. So as far as wage figures are concerned, you're seeing a little bit of an uptick here. This is the least important print of today's read, guys. Really, wage inflation numbers are most gauged by the Fed using the PCE, the personal consumption expenditure, rather than CPI. That being said, it is a pretty weak print here across the board, and you should expect to see some dollar weakness. If you noted, Jamie just posted a chart a few moments ago noting that he did see a 5-wave rally in the dollar index. Obviously, we came right into the weekly open, and we broke through to push into that major resistance. Again, this is a basic 50% retracement of decline off that March high. Also, the upper median line parallel. So if you guys were on daily effects yesterday, you might have seen this chart right here. This is the 30-minute chart for the dollar index. We also put this on the radar charts on Sunday. We came right into that resistance confluence. Okay, so the break that you need to see of this really near-term formation off the lows is right here. Okay, and a downside break would really solidify a little bit more of a reversal trade here in the dollar index. Okay, and again, just a quick gauge of what the performance looks like so far in the session. Here's what we're looking at. You can see the dollar is actually kind of a mixed performance here. You did see the Aussie with a nice rally of 0.61%. Same thing with the Swissy. Still, Kiwi down 0.78, biggest loser on the session. We can take a look at that in a little bit. Pound, we are looking for support. Okay, we are down on the session 0.45%, but we are holding right above that bearish invalidation level. So we'll definitely take a look at that. All right, guys, so we'll jump through all the setups from yesterday. I want to encourage anyone in the room, if you have any questions or trade setups you'd like to throw out, feel free to. Eileen, good morning. Happy Thursday to you too. So yeah, we did get some volatility here on the open. Again, watch for dollar weakness on this print, guys. We are at resistance. Really, the bearish invalidation level, in my mind, still remains at 11,905 level that we cleared in overnight trade and quickly pulled back. At this point, it's even more so of a resistance confluence. Again, with the upper median line parallel for the operative slope off the lows. You have the upper median line parallel for the larger, broader slope off the highs, and that basic 236, which looks like it's capping the advance here near term. Any questions on the dollar index before we move into the majors here? All right. And again, as far as the remainder of the session is concerned, I don't think we have much on tap. Bloomberg Comfort Index comes out at 9:45, not a major market mover by any means. We'll be looking for tomorrow's prints on the University of Michigan confidence surveys. These are the preliminary reads for April, so they will be revised. And we also do get industrial production and Empire manufacturing, which could offer some volatility on the dollar crosses tomorrow. All right, let's jump right in. Okay, first things first, let's take a look at the radar charts from yesterday. We did have an Aussie Yen setup that was on the featured update. We'll go over that in a moment, but I just wanted to cover these real quick because they are dollar crosses. The sterling here specifically sort of in play right now. So here's what the sterling looks like, or here's what we looked like yesterday. We were coming into this key support. We noted in the notes here that we were going to push our lower, broader, bearish invalidation level down to here. 141.20 into 141.35, key region of support. Here's what the sterling looks like on the daily. Again, noting that lower median line parallel. If we take a slider of that same slope right off that low that we made for the month, okay, sort of highlights this key region of support right here. Momentum continuing to consolidate, and we'll be looking for a final clearing of either this resistance trigger, which is the preferred break that we want, or a break below that long-standing momentum support trigger and a move beyond this key region here to the downside, favoring the top side obviously on sterling. Here's what it looks like on the 30-minute. So you can see we flirted with a break below that key region before rebounding right back into former support, now resistance, and then coming right back into this as support. So we'll be looking for a break of this key region today, guys. Either a move sub 4120 with a concerted break, or clearing back above 4180. And I think that would give us a nice little rebound right back to the median line first. And then in such a scenario, if we do clear this, just tack on a quick retracement here and look where the 618 comes in. I'll just show you right now. Something like this. And the 618 comes in at 4119 or 4120. Okay, a couple of things to note why this region is so critical. You have the weekly open. You have the 618 retracement of the advance off the lows just off of last week. And then again, that lower median line parallel for the broader structure. And even on the descending slope that we added on earlier this week, right here, the median line right off the highs there, coming right into this region. So we're at a critical region. It's make or break for the pound today, bottom line. Still favoring a topside move with a break above 41.80, really clearing that way. I think we'll look to buy pullbacks in that scenario, but you are testing near-term bullish invalidation. And certainly if we move beyond this region here today, it would certainly solidify, in my mind, a deeper cut to the downside here in the pound. All right, so we're looking for resistance triggers. We're looking for pullbacks to buy. Looks like we might have a near-term resistance trigger here I'd be looking at, something like this. Remember, the more touches you have to the resistance trigger, the more emphasis or the more significant, technically significant it is. So while you would be tempted to use a trigger like this off the highs, sorry, a little lag in the computer here today, you only get 2 touches on this, right? Maybe 3. So either way, looks like we just broke that trigger. Look for a pullback, maybe to find support right there. And if we do hold that low into the U.S. Open, again, stop against the swing low for Asia is basically how you want to play this. As far as the BOE is concerned, we obviously held rates at 0.5% as expected. The vote was 9-0, guys, so it was a unanimous vote. Some commentary that came out that sort of jumped out of the headlines in red here on the Reuters terminal and the Bloomberg terminals. BOE sees some signs that the EU referendum is weighing on activity, says the EU referendum may cause softening in the first half of UK growth. Considered implications of a Brexit on monetary policy, says a Brexit vote may prompt extended period of uncertainty. Says we'll react more cautiously to data before the EU vote, and says that the Brexit would likely push down demand in the short term. A Brexit may have significant implications on the pound, asset prices, and the unit wage costs not consistent with the inflation target. Rates more likely than not to rise over the forecast period. And those are the highlighted sort of comments that came up from the BOE today. Main thing that you want to take away is that there was a lot of talk about the Brexit and the possibility that the looming vote may be hampering near-term growth. And if they do vote to leave, that they might see a little bit more of a protracted recovery, a prolonged period of uncertainty is what they said. That being said, guys, this is all conjecture. Okay, at the end of the day, if anything, a Brexit might actually have a larger impact on the euro, more so than the sterling. Again, that's even more conjecture. At the end of the day, we're following the technicals. Sterling's at support. I think this thing's been overdone as far as the broader decline in the pound is concerned based on this exit fear or Brexit fear, if you will. So we'll be looking to see if we can find a little bit more of a rebound and a push higher here in the British pound. All right, still my favorite setup. Pound and Aussie Yen. I'm still on the sidelines for Aussie Yen. Missed a opportunity to get in that yesterday. We are pushing into a new high, but we're checking the bearish invalidation level. So we'll go over that in a moment. But if there are no other questions on the pound, let's move right along to the second radar chart from yesterday, and that was on the Euro Aus. So this was a setup that we noted the night before. We were coming into this nice downsloping median line parallel. If you see the low that we made 2 weeks ago was right there. I think it was 47 and change. Here's what Euro Aussie looks like on the daily first. And here's what it looks like on the 30-minute. But just to put things in consideration, the basic premise of this trade, which we were talking about the previous day, here's what Euro Aussie looked like on the daily just a couple of days ago. Okay, we noted the break below major key support confluence, or major key support. You had basic trendline support off the yearly low, and then you had the 2016 open at 149.12. This was a little misprint here. So once we broke below that, the focus shifted to the downside. Now we wanted to be cautious on the downside coming into this key support. This is the low close for the year. You had a long-standing 38.2 retracement. Okay, that's off the lows. You had a 786 retracement off of the lows just from December. And we broke through both of those at this point, continuing to favor the downside. Nice momentum trigger break as well. Keep in mind, momentum is now coming into the 40 support level, which we held through the late part of last month. So a little bit of caution here on the downside, but it's played out perfectly. So again, here's what the scalp looked like back on the 12th. Initial targets were 47.46, then down here into 46.98. We've taken out both of those at this point. From yesterday's charts, there's that 46.39. We took that out as well. Subsequent level to the downside is right here, and that's going to basically be that long-standing 88.6. This is just off the lows, guys, at 45.64. Okay, so big move here for the Euro Aus. I don't want to encourage you guys to get too aggressive on the bearish side from here. Remember, just on an opening range break, typically you'll look to see those stretches into the Thursday, Friday high. So we might make a new low into tomorrow, but keep in mind on the broader picture, the big support confluence. First, you want to just look for the lows that we made back in March. That low actually comes in at 44.65. But more importantly is the actual low from December. There is tons stacked up there, tons. You have the median line off the high, the median line off of just the December high, the low from December, and if we take a look back here, wow, this is really lag today. Sorry about this, guys. There we go. If you take back the low from 2013, right here, you can see a tag there, a tag in 2015, and that same trend line right on the same region. So there is a ton of stuff loaded up at 43.50, 43.46. Ahead of that, I would expect to see a little bit of an interruption, maybe back a check into 47.50, 47 figure, just as resistance before we move off. But the bottom line is inevitably we are looking for that drop into key support, major three-way median line confluence alongside a basic low for December. Okay, so the broader picture, you're bearish below the yearly open again. Okay, the bearish invalidation level still is going to be 49.12 at this point. On the near-term approach, I would just be a little bit cautious here as the daily chart holds 40 as momentum. And then on the 30-minute, there's that 45.63 near-term target that you want to keep into account as well. We talked about this yesterday. I don't remember who it was in the room here I was talking to about it, but remember always a couple of major things, guys, with median lines. If ascending median line breaks to the top side, typically that's going to be the sharpest, largest magnitude part of the rally. If a descending median line formation breaks to the downside, likewise, it tends to be a pretty sizable move, which is what we got last night. Okay, so for those of you who are looking to get into the position, the game plan that we noted yesterday was to look for a rally specifically towards the 50 line, with this being our immediate bearish invalidation level. So you did take out the first target right here at 47.47, but the median line, you didn't quite get into it. You turned literally just pips ahead of that 50 line, and then you got the break to the downside. There was actually a decent trigger here on the 5-minute chart that offered the entry. Again, you would have taken off. You want to take off at key support, always something, and bring your stops to break even, because you never know if you're going to get that jackknife effect. So if you would have done that, again, trailing out your stops, at this point, you're looking for that final target at 45.64. And we'll look to see if we can't get a rebound here into one of these resistance levels to get back on the short side. At this point, you want to bring down your initial, whoop, I did not want to do that. Sorry about that, guys. There we go. You want to bring down the initial bearish invalidation level to here. Okay, so that same 50 line that we just missed an overnight trade, that's going to be our new immediate, or it's going to be the bearish invalidation for the immediate downside bias. Okay, if we get back through this, expect a larger term recovery, maybe back towards the early open before we turn over again. Bearish below 47.47, looking for near-term support at 45.64. Jim, for sure, yeah, I have it on the list, man. Definitely going to cover CAD Yen. In fact, that's next. So let's take a look. Any questions on Euro Aussie before we move off? Beautiful setup, has played out exceptionally well, continuing to favor the downside. Expect some sort of bounce here as we get later into the week, but we'll continue to favor the immediate downside, sub 47.47. All right, CAD Yen. Here it comes, Jimmy, just for you, buddy. Here's what CAD Yen looks like on the daily. I was extremely frustrated with this trade yesterday. I just missed the entry. It was like a blink. I swear I left my desk for a couple of minutes on the open of Asia, and the thing started to play out. Now, you did get a pull to the downside, and it has rebounded a little bit, so I am stalking a short entry yet again to see if we can't get back into this. But here's what CAD Yen looks like first on the daily chart, and then we'll jump into the 30-minute. Okay, so here's what it looks like on the daily. And the basic premise of this trade, again, remember last month we talked about the reversal here. We called it right on the dot. We did get that move. We kind of stopped the short side once we got into this key confluence. There was a break, quick recovery, and now this rally is at risk. And while I did like a short position last night, you would have actually gotten the quarter of the daily ATR. We are kind of showing a little bit of a rebound here. So what I want to just say to you, Jimmy, is this. I'm definitely on the side of looking for short triggers, but I don't want to put it past this thing to go back and check this major key trend line first. This is not only this is just a basic trend line resistance, guys, off the June highs. 3 tags, 3 rejections, 3 inflections. That's just a little bit higher from where we are right now. And the low day or the high day close so far for the year comes in at 86.53. Okay, here's what it looks like on the 30-minute. Nope, that's not it. All right, and here's what we looked like last night. So, nice trigger break here in momentum, gave you a break below that median line parallel. The initial target was 84.57. We got as low as 84.75. So we just missed that downside target before reversing here. Now checking once again the median line right off the lows as resistance. Momentum coming into a resistance trigger as well. So the next topside target I'd be loving to look for as a possible entry would be right around, come on, right around here. Okay, just to show you where we are. Okay, so this is the swing low that we made near the high here. You can see some pretty decent inflection points. It's just a soft pivot, and it's going to be right above another test, basically, of the weekly high. The major critical resistance in the near-term bearish invalidation level is going to be that same trend line that we tested back in March. Okay, and that's basically this trend line here that we just talked about. So either way you slice it, I wouldn't put it past this thing to make one more poke at the highs before we turn over. Broadly speaking, like I said in the piece, we either need to find a major rally into this resistance again, or break below this median line formation with a move sub 84.57 specifically needed to validate the reversal. Remember, guys, we're trading counter trend here if we're trying to short right now. So on that short last night, or on any shorts that you take until we break out of this formation, you want to stay nimble. You want to keep your leverage size smaller, okay? And you really want to try to execute on the best possible entry because we're trading counter trend. So you want to make sure you can get your stop as close as you can, to really increase your chances here. But broadly speaking, I am looking for short triggers. One thing that could pan out into the U.S. Open, just to give you guys a heads up of sort of where my mind is a rally here in momentum to check that trigger and a failure. Here's what it looks like on the 5-minute and the 1-minute. A couple things I'm looking at. Oh, well, we'll take it off that low, actually. Remember, taking it off the low in price is always going to be the best way to play it. So something like that. And on the 1-minute, you really don't have much of a target to have, but what you do want to notice is that you are marking some divergence into the highs here. Okay, price action making a series of higher highs, higher highs, higher highs, lower high, lower high. Okay, so looking for a turnover, looking for possible short triggers in CAD Yen heading into the U.S. Open. Hey, Patrick, great to see you in the room, sir. Says, can you explain what your Pitchfork doesn't start at the lows, or why your Pitchfork doesn't start at the lows on the CAD Yen? Is it for the best fit? Which one there? This one right here? Yes. All right, cool. Great question, Patrick. So there are a couple of different ways we can use pitchforks. There are all different types of modified pitchforks that you can use. One of them is called a shift pitchfork, and all a shift pitchfork does is it adjusts the angle for the pitch to ride with basic trendline resistance. Okay, this is not that. And a shift formation, this is just a quick breakdown for you guys who are learning pitchforks, would be something like this. Okay, where the basic trendline resistance on the rising slope and the basic trendline support on the descending slope is adjusted, and then the pitchfork is adjusted based on those measures, right? What I did here is a lot of times the secondary low or the low previous ahead of the subsequent major low is oftentimes going to be the proper gradient or slope that you want to work with. This is just something I found over the years. A lot of times, for example, what's another example? I can show you this on the dollar index. So a lot of times when you're working, absolutely, Tabor says slope is key. Absolutely. So a lot of times when you're working on a turn, for example, here, Tabor or Patrick, if my dollar chart wants to come up. If you're working on a slope like this, for example, if we take this slope, well, that kind of jacks up everything, right? If we take a slope for the previous high right ahead of the major high that we made, a lot of times that deadening the gradient of the slope will be a much more appropriate trade. And if we do that, you take a 50 line, basically just dividing that range. And a very simple way to do that, guys, is just take a retracement from one point to the center point and take your line right to the 50 level. If we do that, you can see that that actually caught the exact low back in March for the dollar index. Upper median line parallel caught the exact high today, the exact high on this late swing in March, right? So we get a little bit more conviction on that slope. So a lot of times with this stuff, Pat, it's just going to take some time before you get comfortable really applying them, but mess around with them. I definitely encourage you guys to try different slopes, and always remember this. I'm trying to remember what we were just looking at. CAD Yen, where are we? All right. Try to remember this. The deader slope, or the less sharp the slope is, typically will always be more beneficial. Okay, so I could start off with a slope like this, sure, but as soon as the market breaks out of it, no longer really paying attention to it. And a lot of times I'll start with a steeper slope like this, a sharp slope, Pat, and if the market doesn't respect it, then I'll go to the previous low, right? Let's take it to the previous low, and lo and behold, now price action's respecting it much more clearly. Does that make sense, Pat? He says yes. All right, cool. Tabor says modified is always the slope of A to C. For the corrections, absolutely. For the advances, even on a 5-wave advance, Tabor. Gary says, can you place stops based on your pitchfork lines? Certainly you can, Gary. Remember, man, the only thing that or the most important thing that matters in every single trade is your risk to reward ratio. My problem, Gary, with placing a stop against a slope line is one single thing: time, right? So as time progresses and as that time decay happens in the trade, now all of a sudden your stop is against this high. Well, now this high, 4 hours later, is still inside the slope. So what are you going to do? You're going to keep kicking out your stop if you're taking a short? No. At the same time, if you're taking a long, for example, off this level, you put your stop just below, right? Well, now the market moves another 4 or 5 hours. Now your stop's way down here. No need for it, right? You'll have to bring that stop up to just below that median line. So I'm not really a big fan of putting stops against median lines. You can certainly do it, Gary, but you need to be mindful of the time decay on the trade. Okay, so as you progress through the trade, as you go through the session, the slope will obviously impact where that level, where the significance of that level is. Gary, does that make sense? I will use stops on slopes, or more so, I guess I can use entry on slopes, Gary. The biggest example I can show you is I would use slope for entry, but those are never orders. Those are always market orders, right? So I always take it at market if I'm at a slope line and there's a trigger and momentum and I want to take it, sure. But to place an order against a trend line or at a trend line, for me, is a little bit risky. He says, cool. When I think about it, it would be a schoolboy error. Cheers, Gary. Yeah. I mean, that's just something, again, you tend not to really take into consideration sometimes. I don't blame you, but you're in the right place. No question is restricted here, so feel free. All right. So CAD Yen, looking for short triggers. We'll be looking to see if we can get one last stretch into a high here before this thing turns over. And again, I do like the broader picture to the downside. Bodes well, and I'm going to take a quick segue here into some of the trades that were highlighted in yesterday's intraday update. So that's not yesterday's. Here we go. There we go. All right. So I want to talk really quickly about the oil trade. And this is something with the CAD crosses that me and Jamie were looking at last night, sort of bodes really well. And you know, guys, I don't intraday trade per se, the SPX or the Dow or crude for that matter, but certainly watching these major inflection points can be critical for their implications moving forward, specifically as it pertains to crude, what that means for the CAD crosses, right? So here's what the crude trade looked like yesterday, and we are coming into a critical region of resistance. And I know that we talked about it here in the room yesterday, but I just want to recap with everyone. It's still the same range that we talked about. Remember, I kind of lost my train of thought yesterday, and I was talking about those trend lines, which pair we were talking about. It was actually here on crude. And we were talking about these inflection points where a basic inflection trend line, so resistance or support rather, resistance, breakthrough, support. If you take that same slope and extend it off the low from November, support, resistance, resistance. So that same slope line is resistance. Add to that the 50 line for the formation off the highs from 2015, right there. Add to that the 618 retracement of the decline off October, all right here. Okay, I know we're sitting above that right now, but you get the picture. This line that you see right here in dash, this is just the previous yearly high that you made here in March, and it's all sort of stacked up against crude right now. And if we hold these highs, and this is just an if-then statement, but if we do hold those highs, look what's happening in momentum. You'll have a lower high in the momentum oscillator and a higher high in price. So yes, crude is at resistance. You could see some pullback from here that would give some alleviation, at least, to the dollar CAD. It would be a little bit more heavier for the CAD. So for CAD Yen, that would be bearish for CAD Yen, get us that turnaround that we're looking for. So keep all these sort of pictures in your head. Add to that what we just talked about with crude coming into resistance. We also noted last night some charts on the SPX and the Dow. So the S&P 500, 2081 was a region of which you want to keep an eye on heading into the U.S. trade session today. Here's what it looks like on the daily chart. Okay, we're probing above that right now, but today's close, it's what's going to be paramount. Again, here, even more so, you're seeing some pretty radical divergence as we make a new high in price. Bring your attention to a basic slope or median line off of the lows from last year, okay, and the lows that we made this year. You can see that median line support, support, break, resistance, resistance, resistance. It also consists of a basic 88.6 retracement off the high and basic trendline support off the November and April early open highs. We're kind of holding that as support right now, former resistance. So for me, the focus into today's session is going to be on either a push through this median line and a rally. Next topside target really isn't until the November high day close at 2108. Or you need to see a really much more concerted break back below the yearly open here at 257 to get the validation for the reversal. Again, these are just your 200 and 100-day moving averages. By the way, these retracements are working under the assumption that this is going to be the high. If we stretch into a new high, obviously we'll need to readjust these retracements. Keep that in mind. But that being said, pretty major levels here today for the SPX and the Dow. Tabor says, how significant is CL crossing 200-day moving average? So if we take a quick step back to the oil trade, I know that you're looking at this 200-day moving average. It can be significant, sure, Tabor. And obviously, if you look back at price action, for me, when I look back at price action, the way I decide, Tabor, if it's significant or not, is I don't care what anyone else says. Okay, I want to see what price has done around that level. And if we do look at the 200-day moving average, absolutely. Reversal, quick move lower. Reversal, quick move lower. Even here in June, just kissed off it, quick move lower. Okay, so typically you can see that the 200-day moving average, yes, has offered some really nice inflection points. But that being said, again, doesn't always mean that's always going to be the case. You can always get a false break scenario where this thing runs into major structural resistance, then comes right back below. The move back below this would certainly reaffirm the move back towards the lower median line parallel. So, Tabor, I'm definitely watching 200-day moving average. That would be my sort of validation for a reversal here near term to target that lower median line. But I just wouldn't be a blind bull just because we broke above the 200. That's what I mean to say. You can see a lot of these, and specifically in this type of market condition, you could definitely see a couple of spike throughs. Call this a throw over, where it kind of runs through resistance and pulls back. So for me, I guess to include what you're saying, Tabor, the major range you want to focus on into today's close is going to be that 40.30 into that 41.90 level. Okay, we'll want to see a close either above 41.90 or sub 40.30. Make sense? Good question. So I'm not really a big fan of trading using moving averages, but definitely the 200, the 100, if you're looking at a weekly chart, the 52-week, these can be absolutely important, not so much for the angle or crossovers or this type of thing, but for support and resistance for sure. All right, Tabor says, got it. Right on, man. So we went over the SPX at resistance. We'll continue to see if this holds resistance into the open. Here's what the Dow looks like. Very similar situation here in that if we do break higher, again, you're kind of moving against a basic pivot line here. Not the strongest, nothing I want to stress too much, and I already told you guys this, but resistance, support, resistance. It was resistance into yesterday's close. Here we are pushing higher. As I noted yesterday, wouldn't be too surprised. There is room here for a stretch towards that 1776, 1800 level. Basically, that's the highs from November, and again, an 88.6 from the decline off the May highs. Okay, so we got a little bit more room here in the Dow before you come into anything structurally critical as it were. But again, momentum divergence if we close at these highs, and we'll be looking to see if we kind of teeter out today on some of this weaker US data. Questions on the SPX, Dow, or crude? And then we'll jump into Aussie Yen real quick. Okay, so here's what Aussie Yen looks like on the daily chart. I highlighted this setup yesterday also on Daily FX. We were just talking about the beginning of the turn, and basically this is what we were looking at. So 50 line for the current operative slope off of the yearly highs that we made in March, basically late March and early March, was converging on a longer standing pivot here off of, this is off the 2013 highs, actually, this broader structure. There was a short trigger that gave out last night, and actually, like I told you guys, I actually missed it. It's quite sort of frustrating. It did attain a quarter of the daily TR before reversing sharply, but then here we are now again approaching critical resistance, and this is the bearish invalidation level. So your ideal scenario is actually to get a probe into this region for a little bit more of a concrete reversal. Also note that momentum, former support trigger, can also come into play here as resistance. And again, the major invalidation level is 84.72, and that's basically the 2015 low day close that you made there on August 24th. So just to take a quick step back, again, show you the duration or the breadth of this formation off the 2013 highs. There's the 2014 highs. These are all sliding parallels of the same slope. Really nice inflection. Really nice inflection. We broke through that last night. Low day close, 618, and the 100-day moving average. So Tabor, we were talking about the 200-day on crude. Similar thing here. The 100-day has offered some nice pivots. Nothing crazy. Nothing crazy. Nice top there. But it comes right in line between the 618 retracement, between the 2015 low day close, and that's the region of 84.39 into 84.72. Here's what it looks like on the 30-minute. Okay, so as I noted to you guys yesterday, I specifically wanted to just make it was too early to tell or to rely on the proposed descending slope, but it does highlight that 83.21 support. We just missed it. The support trigger was up here, okay? That was 83.74, 83.70 or so. You dropped as low as 83.40. You're only looking for about 30 pips per scalp on this one. And then the reversal that took you back above this sort of invalidates this whole formation. So we're going to go ahead and trash that at this point. Well, let me take one step back. If we get a near-term trigger here in momentum and it moves back below, this is my initial inclination, is to stretch that formation right to that high. Okay, I can't do that with you guys right now because, again, there's no validation. This is just simply chasing. I don't know that this is a high. I'd need to see a change in momentum. I'd need to see a change in price action, an opening range break to the downside, something to help me suggest that this is a high. Now, you have a lot of things that are sort of helping you make that assumption or pushing me to make that assumption. Let me just snap these lines for you. Namely, the fact that, again, higher high in price, lower high in the oscillator. So you're getting some divergence, suggesting that the upside slope is getting a little tired. You can see that the spike high that we made here on the 830 candle came in right at 84.47. Okay, the actual 100-day moving average comes in exactly at 84.48. Okay, so we're getting awfully close here, guys, and we really want to be mindful looking for short triggers. For me, on a trade like this, Gary, to go back to what you were talking about, placing stops against a pitchfork, I'd be pretty comfortable if we get another push higher here to take a stop against 72, maybe put it at 76, give myself a 5-pip cushion there, and if we get a decent trigger to try to play the downside. That's different because you're talking about a sort of horizontal trend line or horizontal key level that you're looking against. But that said, hopefully we can see this thing start to fail. Here's a near-term trigger on the 30-minute chart you want to be mindful of. Right here. Okay. And then again, a break back below that 1618 extension at 83.97, essentially the 84 handle, would sort of validate a move, specifically if it takes out that support target there in momentum. Let's take a quick look at what this looks like on the real near term. Nope, I think we just might have missed a decent trigger. Yeah, so we just missed a decent trigger. This is your favorite types of triggers, guys. The trigger break initially gives you a pullback, but on the pullback, when the market comes back to test resistance, the former trigger support acts as resistance. If you don't get this entry, this is an awesome entry. If you do get this entry, this pullback here still should be within your stop limit. Okay, this is basically only less than a 20 pip rally here before it turned over again. Your stop is at least 30 pips or no more than 30 pips out. So it still would have worked out great, even on the 5 minute here, on the 1 minute failure just ahead of 60. Again, on building divergence, lower high in the oscillator, higher high in price, would have been a great entry. So I'm not going to chase it here. We'll see if we can get a recovery into US Open. On a recovery, guys, we have to get a stop that's 30 pips off of this high. If we can attain that, we'll look to be re-entering here on the short side for Aussie Yen. Decent trade here. Decent trade. And again, if we put the pictures together, guys, with the SPX testing a near-term resistance, Dow eyeing resistance not too far off, crude sitting at resistance, right? It sort of matches very well with dollar CAD seeing a little bit of an alleviation to the upside, Aussie dollar coming off, some of the commodity currencies coming off a little bit. So the pieces of the puzzle are starting to fit together a little bit better, I think. And we'll be looking for that dynamic to pan out here as we close out the week. Okay, those are the setups that I've been following and that we'll be continuing to follow into the close of the week, guys. Let me know if you have any specific pairs you want to review. I'm kind of spent on my end on this pairs that I've been following, at least in the immediate term. Aussie Swiss is a trade that we published a couple of days ago. I just kind of want to give you a quick update on that. Here's what Aussie Swiss looked like earlier in the week. We're coming into this resistance range confluence here. This turned out to be an interesting position because, we actually just broke, right through it, and we took out all the topside targets into that 74.55 level. Literally, that was the exact high that we made an overnight trade. So while we were warning of a possible pullback here, but to stay constructive, you didn't really get much of a pullback at all. In fact, the biggest pullback that you got was a reaction off of that 74 handle, which was obviously the key 618 retracement of the entire decline. So again, just a word of caution here on Aussie Swiss. I don't want to be stubborn and continually favor the short side, even though this thing has been sort of rallying through the highs, but you're coming in some pretty big levels here, namely a couple of swing highs that you made in March, that 88.6. You got the high day close for the year, which is 74. What's the high day close for the year? Oh, excuse me. That was the high day close for 2015. That 2015 high day close for December, excuse me, right here, December 2nd, okay? And that basically came in right around, what's the close? 74.40, 74.39, okay? So you got a lot to look at here as possible resistance on a playback move. I don't want to really get too aggressive or to encourage you guys to get aggressive on the shorts just yet, but a couple things to look at. Momentum. Obviously, we keep poking into real overbought conditions. This is very healthy of a strong uptrend. I also just want to highlight really sharp rebound off 40. That's constructive. Really sharp rebound off 40. That's constructive. First thing you would look at to just test the waters to see if we'll get a pullback is a support trigger there and a move back within the confines of this median line. So move back below that confluence resistance we were talking about yesterday. Break higher from here, you're looking at 75.10, which is the December high day close. Okay, that's right. Okay, I mistyped that. That's the December high close. That's right here. The high day close was actually that 74.39 level I just told you. This was the higher high, actually. But the high close comes in right around that 75 handle. Any questions on Aussie Swiss? Yes, and thanks for the puzzle pieces, says Eileen. You're more than welcome. Shorts are counter trend then for Aussie Swiss. Right now they are, yeah. Who asked that? That was Eileen. Yeah, Eileen, that is, I think you would have to agree with me, right? Now, don't get me wrong. We're at resistance, but we're at uptrend resistance, right? There's a difference between hitting resistance in a downtrend, guys, and hitting resistance in an uptrend. Anytime you hit resistance in an uptrend and you're shorting, that's a counter trend trade because this is obviously since the start of the week a pretty strong uptrend. The momentum signature since the start of the week, hold at 40, hold at 40, hold at 40, overbought, overbought. That's very strong momentum signature, right? So right, exactly, Eileen. Yeah, careful on any type of short exposure on this. Like I said, the break back below the 74 handle would validate, for me at least, a near-term reversal. That being said, if we do get a break higher, look for a run into that 75 handle, that high close for December. All right. One other thing I just wanted to touch on, and I haven't really taken any positions on this yet this week, guys, but sterling yen. We talked about this in the webinar yesterday, I think. I know this was something you guys were looking at. So that major resistance that we highlighted yesterday held. 55.79. You had the median line there that was coming into play. You had a 38.2 basic retracement, nothing fancy off the highs. And just above that, you had that 1618 at 56.12. And this was sort of the main region of resistance we would have looked for to validate the reversal in sterling yen. Now, it just so happens that we did break the downside, but look what happened. Look where we found support at the former 236 retracement, but also the 50 line for the operative structure we've been working off the highs there. Really nice pivots. Pivot, support, resistance, resistance, support, support. Okay, so we're not out of the woods yet. I do still like the upside for sterling yen. I'm just not a big fan of trading yen weakness just yet. I think you get a massive yen weak trade, but not just quite yet. Gary says, going back to the Pitchfork trend lines, you mentioned that when the lower descending line breaks, price action tends to drop quicker and upper vice versa and be a larger move. Do you consider this type of price action behavior to be retail crowds paying attention to pitchforks, moves away, attention to pitchfork moves, or commercial traders? Gary, I'm not going to lie to you, man. I don't really stress who it is. I can't tell you. It could be retail crowds. I don't really want to be on the same type of same side of retail crowds most of the time. You'll note that, but it's just a reaction to price. Let me take a step back. All of these indicators that we use, guys, are behavioral studies. Whether it's RSI, whether it's trend lines, whether it's pitchforks, whether it's moving averages, right? All of these are behavioral studies, how the market reacts as you come into these technical indicators. So Gary, it could be commercial players. I would assume that it is commercial players because typically the move is in that direction. But I just want to adjust what you said a little bit here, Gary. It's not that the break of the pitchfork tends to lead to a big move. That's not always the case. And I think the British pound is a perfect example of what I'm talking about, right? This break of the pitchfork, we just moved down a little bit, but we didn't even break the previous session lows, and we sat there for the entire US trade session yesterday, right? So I wouldn't say that this was a break and a plummet, right? But if we talk about Euro Aussie, right? This is a downside break of a descending channel, and that's when the move tends to be a lot larger. Okay? Obviously, when we break these median lines, we look to play the breakout. But what I was trying to tell you earlier is that the breakout tends to be a lot bigger magnitude if it breaks the direction of the trend. So a downside slope breaks lower, an upside slope breaks higher. That's when you really start to see the big, big moves. Gary, does that make sense? I mean, I really couldn't tell you if it was retail crowds or commercial crowds. I would assume it's more commercial just because it's in the direction of the trend, which is going to be playing out rather well. But He says it does. Thanks, Mike. You're more than welcome. Francis says, please, can you touch up on dollar CAD? Oh, how could I forget? Where's my mind? Dollar CAD. Yeah, absolutely. So here's dollar CAD. I was talking with Jamie about this, and he's looking at some interesting stuff, guys. I do also think, let me just take you back quick. I'm sure he must have showed you this, guys, yesterday in the webinar, basic channel resistance. Okay, you saw some really nice pivots, resistance, resistance, break, resistance, break, support, 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 break, resistance, right? If you take that same slope for the channel that we worked on back here in 2013, that same line is also a very strong pivot. Support, support, break below, resistance, 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 break above, support, 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 break above, support, support. Look where we are right now. Okay, so before I get excited about playing a dollar CAD reversal, this is why I highlighted this yesterday. I didn't want to put it on the report, guys, just because I didn't want to encourage anyone to start calling a low on this. It looked like it was breaking back above, but we haven't yet. Okay, and it's very important to be mindful of that. All you're looking at 28.61, by the way, is the low day close for October. That caught the exact low back here in March, and today we tried probing right through it, and we came off. Tomorrow and into the start of next week, it converges, that same low day close, on that parallel we just talked about. All right, so initial resistance, 28.61, bearish invalidation hadn't changed at all, guys. 29.65 into 29.76, still the level we need to clear to thwart any further downside pressure here in dollar CAD. Francis, talk to me about dollar CAD. The near-term chart looks like this. I don't have a clear structure as far as any type of ascent yet, but what I can tell you is that we can't get bullish just yet. Why? We responded to downtrend resistance. Right? If we were responding to uptrend resistance, then I'd be looking to buy the pullback. But we responded to downtrend resistance. So it means that we can't really validate the turn yet. That being said, guys, I need to make it very clear to everyone here, I am still looking for the turn higher in dollar CAD. But what I'm telling you is from a technical standpoint, as a technician, it's just not there yet. Just not there yet. So I'd rather sit on the sidelines here for dollar CAD. We had some really nice scalps on the downside once we broke that 129.67 level. But from here, I want to be cautious about any type of long exposure. As far as trying to take a short, it's just not my cup of tea here. If I'm looking to short the dollar, I'd rather take it on a sterling position, on an Aussie position, not an Aussie position, on a sterling position, possibly on a euro position. But right now, not really from here. Does that make sense? Francis, on dollar CAD, does that help? He says, I'm not taking a trade on it yet. I have to be convinced. Right with you, man. I'm right with you 100%. And no one wants this thing to turn more than me and Jamie, trust me. We've been watching this decline for so long. But it's hard, especially right now with the dollar index coming into resistance. Remember, the dollar index does not contain the loonie. So when we do look at this dollar index, it's the Dow Jones FXCM dollar index. At its inception is the equally weighted index of the euro, Aussie, sterling, and yen. Okay, CAD is not in here. But my point being, with the dollar drop off here, I'm a little hesitant to try to call the low on dollar CAD. All right. So Francis, I hope that helps, man. Let me know if you have any specific questions further on that dollar CAD trade. I think we'll get some clarity here heading into next week. And again, if those crude prices do hold, if the SPX does correct, you can expect to see some of those calm currencies start to come off a little bit. Aussie, CAD, hell, even Kiwi. And I think that's when we start to attack this a little bit more fervor to the upside. He says, thanks, Sam. More than welcome on that. Patrick says, can you show me how to add median lines in the Pitchfork? I have been adding them by guessing where the median line would be. So there's a couple of different ways you could do it. Good question. Again, I guess I'll just bring it to the example, to the biggest example or the easiest identifiable example here. So we're drawing a basic median line structure. There's a couple of different things that you can do. There's something called a sliding parallel. And a sliding parallel, Patrick, is just when you take that slope and you connect it to any major key highs or lows in price. Whoops. okay? And a lot of times you'll do this just to kind of gauge where that slope might have some influence, right? The 50 line, which is I think what you're asking about, how do I draw the 50 line, is very simple. So if this is the pitchfork, let me just make it a little bit bolder so you can see here. If this is the pitchfork, you take a basic retracement from if this is the slope, the baseline we call it, okay, in gray, from the median line right to the upper point, okay? Then just take the 50. There's your 50% retracement. You take your median line. You have to match it up to the convergence of the baseline and that 50% retracement, and that's the bisector for this upper half of the pitchfork. Okay, same thing with the downside. Once you've done that, you don't need to take another retracement. You just move this to right here. And then again, take that median line right to the bisect of the baseline and the 50% retracement. And that's going to be your median line. You can see that this one caught the low literally to the pip. Okay, so that's one way to do it, just to get the 50 line. The 50 line has been a savior in a lot of our trades, guys. You don't always get a rebound from the median line here to the lower median line parallel, as you can see here. Same thing on the rally. Sometimes you'll find the rally fail right at the 50 line, then come right back. An example of that, my friend, is on last night's Aussie Yen trade, right? This was a perfect example of a trade that came right into, not the Aussie Yen trade, the Euro Aus trade. Here's another one, right? So this is the 50 line of this quadrant, right? Or this half of the broader structure. You can see that that added some support, breakthrough, resistance. Yeah, I got a little throw over there, but look, support, resistance, support, resistance, support, break. All right. So a little lesson there on pitchforks and how to use those sliders. Does that help, Pat? Does that make sense? He says, got it. I'm assuming that's good, right? All right. A great tool to know. Aline says, cool. Thanks to Patrick for the pitchfork questions. Say, Pat, you got some fans, buddy. Okay, so before we head out, guys, just a couple of different things we might as well just touch on before we end up the week here. This is the gold trade. Looks like we're coming off of the upper median line parallel as support here, so I don't want to get bearish on gold just yet. We did get that trigger break earlier in the month, and I do think that gold does have some further upside to go. Specifically, the dollar continues to hold that resistance, and we see the break of support. Expect gold to find some more upside thrust here on that trade. Another trade I just want to talk about real quick, euro pound also. Making a pretty big move here and testing the upper median line parallel for a multi-year formation. This lower median line parallel caught the lows almost very, very accurately. You had a pivot right here on the median line, with that breakout being the origin of the advance. Again, 618 retracement of decline. Actually, if we take this out to the highs, that's more appropriate. The 618 retracement of the decline and the upper median line parallel, giving this thing a pushback. The break I need to see to get comfortable on the short side would be a move past this region here. Okay, 1618 extension off the low, that's 78.90 essentially. I would need to see a break below that to favor trying to get short on euro pound. Aussie Kiwi is another trade that Jamie talked to you guys yesterday about getting on the long side. Was he right? We came right off the lower median line parallel, literally almost to the tick yesterday before rallying right through. Obviously, this is propagated 90% by severe Kiwi weakness. But I just wanted to note here as well, we are checking near-term resistance, okay? Now, objectively, what I want to note is this, guys. Objectively, Kiwi has broken, or the Aussie Kiwi, rather, has broken the simple objective monthly opening range. Okay, here's the monthly open. We set a high, we set a low. Yesterday, we probed through that low and failed. Okay, we closed right at the lows. And then here's the break taking us through the highs. The close today is going to be paramount. So on a basis of just price action, if we close at these levels, it would be constructive for the pound, or for the Aussie Yen, Aussie Kiwi, excuse me. You can tell it's Thursday, right? You might get a little bit of a pullback here, but if we do close above it, that would suggest you want to be cautious of a little bit more of a material breakout here. And here's what the scalp targets look like. We put this scalp together last week. I don't know if you guys remember. I don't think it was last week or the week before. Right here in the webinars, it had to be when this low was. So I think it was 2 weeks ago. But the levels haven't changed. We had a whole lot of chop here over the last week and a half. I didn't really like the trade, but looking pretty clean with this formation now. See if that holds the highs. One last thing, Aussie dollar. We got the employment numbers yesterday. So, guys, the employment print was quite interesting for the Aussie dollar. And I just want to note a couple of things. It's so funny that the exact opposite of what the market was expected happened. Here's what the read looked like last night from Australia. I tweeted this out. I think you might have seen it on Twitter last night. Whoops. So we were talking about the fact that they were expecting a downtick in the employment number, in the headline unemployment number, or uptick in the headline unemployment number, and an uptick in the participation rate, which is a good thing. And I said even if that happened, we saw a 5.9 print, that would be positive if it's accompanied with an expansion in the labor force. The exact opposite happened. You saw unemployment downtick to 5.7, and the broader labor force participation rate holds steady. On that basis alone, guys, it's a decent print. It's a decent print. It just means more people got jobs, right? We didn't get an addition to the labor force, but more people got jobs. We beat with 26,000 versus 17. The devil's in the details, though. It's all part-time employment, okay? Full-time actually contracted 8.8 thousand jobs last month. We gained 34, but it was all part-time employment. A deeper look into the metrics also looks a downward revision to the previous month. So we didn't get 15.9 thousand jobs last month. We got 13.9. And again, part-time jobs didn't lose 15,000 jobs. They only lost 14, but they regained them double-fold last month. Okay, so this is broadly a soft print, guys. No matter how we slice it, it's not really the strongest read as far as the labor force is concerned over in Australia. So the result in the Aussie dollar was you saw some back and forth. We inevitably did push higher. Here's what the Aussie dollar looks like now. Again, the major key support was right here. We couldn't get below it on a move lower. And here we are right back at the highs for March at 77.21. But the daily chart really highlights. So, Patrick, for Pitchforks, right? This is a sliding parallel, man. Same slope, extending off the high from October. Resistance, messy, but resistance nonetheless. And here we are again. Now we're putting in an outside day reversal today here, guys. And we typically like to use these as confirmations, but it depends where they happen. A bearish outside day reversal to the downside at resistance is your ideal play. A bullish outside day at resistance is not your ideal play, okay? Because a lot of times this type of outside day reversal can be exhaustion as opposed to the market making a decisive reversal in trade. So that's all I'm going to say on that. I don't have any open positions on Aussie dollar. I don't think I'll have anything necessarily this week unless there's some sort of change in the dynamics here. But at the end of the day, if we do break the upside, I'm still not interested in long exposure because coming right up is this huge pivot line back from 2013. Support, breakthrough, resistance. Well, that's not too far off from where we are right now, 77.60 or so. Right? So I just think the Aussie long side is stacked up with levels I don't really want to mess with. So if we don't get the reversal, we don't get some more conviction turns, I'm kind of not really looking to trade Aussie for the rest of the week. Keep in mind, again, we're getting divergence, but that has nothing to do with time. We can continue to mark divergence for the next 2 days before it turns. So I'll give you guys an update if anything changes on this, but as of now, I'm kind of sidelined on Aussie dollar. Eileen says, okay, another week in the box. Enjoy your week and week. enjoy your end of week and see you for the next. Always thanks for the help. I appreciate that, Eileen. Patrick says, never considered parallels before this last month. I like it. Great webinar today. I appreciate that, Pat. Guys, it's always a pleasure being with you. Thanks for everyone who attended. I'm over on time, so I got to run from here. We'll give you an update tonight if there's anything new. I'm going to be a little bit more reserved now. We had a good week, and I kind of just want to keep the powder dry. If there's not anything that points out blatantly at me, we might not have an update today, but I'll give you guys the deal on the SB Squawk handle. Till then, best of luck trading, guys. Remember, Monday's webinar on Daily Effects is a free public webinar. We'll be back here on SB Tuesday, Wednesday, and Thursday at the same time. Best of luck trading. We'll see you next week. Cheers.